Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, April 26, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what to specifically do about them in your portfolio, you need to be a client of 42 Macro. So today's key macro events are fresh evidence of our resilient U.S. economy and sticky inflation themes, plus the BOJ remains dovish. So the nuance there is the March PCE report supported both our resilient U.S. economy and sticky inflation themes. Moreover, the report supported our view that the U.S. labor market is booming, which is contributing to above-trend nominal household income growth, a key driver of persistently above-trend consumption growth. The report also supported our view that the West Village Montauk effect is contributing to persistently above-trend consumption growth as well. Elsewhere, the BOJ left the range for its benchmark policy rate unchanged today at 0 to 0.1%, while also reiterating their pledge to continue buying JGBs in line with their March meeting announcement. The BOJ revised down its growth forecast and tinkered with its inflation forecast, with the net result sending neither a hawkish nor dovish signal to market participants. The market implications. So while the Q1 GDP report represented a shot across the bow to our resilient U.S. economy theme, the internals from the report from a consumer spending and business investment perspective were quite positive and suggest corporate America still has revenue and profitability tailwinds. Next Thursday's non-farm productivity and unit labor cost data will be telling in that regard. Elsewhere, the BOJ's decision to maintain its ultra-loose monetary policy setting amid 2+ years of above-target inflation is weighing on the Japanese yen, which registered a fresh 34-year low versus the U.S. dollar today. The risk that the BOJ accelerates policy normalization over the medium term has declined considerably. That outcome is bearish for the yen and bullish for Japanese stocks and global liquidity at the margins. As always, transitioning to our 42 macro dashboard here. As always, wrapping up with the question from our community. This question reads, today's PCE versus GDP PCE. So the question reads, it's a pretty long question, so I'll kind of break it up in parts here. So it says, hi Darius, can you explain the difference between the PCE that was issued yesterday and the PCE that will be issued today? So these are the same statistics, but the difference in the reporting is that the PCE that was issued yesterday are quarterly data. So when you look at them on a quarter-over-quarter basis, or if you're analyzing them on a year-over-year basis, it's going to be the average of one quarter versus the average of the quarter from 1 year ago, versus the PCE data that are released today are actually the monthly indicators. So if you're going to look at them on a quarter-over-quarter SAR basis, it's this current month minus 3 months ago, or if this current month minus 12 months ago, if you're going to look at it on a year-over-year basis. So it does have different implications in terms of the growth rates and the inflation rates, whether you look at it on a quarter-over-quarter or on a 3-month annualized or year-over-year basis with the monthly time series. So just be aware of that. But we break all that stuff down, obviously, in our lit up morning note. In terms of regarding today's report, are spending and income numbers important? How do professionals analyze negative or positive numbers? So are the spending and income numbers important? So obviously, yeah, it's consumer spending is about 70% of the U.S. economy in terms of aggregate consumer spending. So obviously, understanding where household consumption is going, the trends in household consumption, what's driving it, what could potentially cause it to inflect. Those things are incredibly important if you want to understand the ultimate direction of U.S. economic output. How do professionals analyze negative and positive numbers? The same way that we always do with calculus and arithmetic. There's no other way to do it. So get back to the question. Do you just watch the numbers if they are larger or smaller than expected, as social media traders do, or do you read the entire report and generate your ideas? So that's you guys obviously know the answer to that question. So the reality is there's a lot of different ways to analyze an economic data point. They're all relevant. So the first way, which I think is the easiest way to do it, because you generally get that reported on a news type basis, which is, was it better or worse than expectations? That's kind of step one. That's like the lowest hanging fruit for analyzing an economic statistic. The higher hanging fruit, moving to step two, is understanding whether or not the time series accelerated or decelerated sequentially, and whether it's trending higher or trending lower in terms of the new data. And then the third layer is understanding where the most recent growth rate or the most recent output is relative to its longer term time series. Is it a above trend value, i.e. it's higher than it's a longer run average? Is it a below trend value? Is it lower than its longer run average? Is it a critical inflection point, i.e. rolling off the top of a cycle, or is it a critical inflection point in terms of trudging and coming off the bottom of a cycle? Those are the kinds of things, that's like layer three type analysis. We do all three types of analysis for any major economic data point that we think will have market implications over the medium term in terms of helping us build conviction in or erode conviction in one of our active themes. And so, as you know, we have several active themes right now. We just talked about two of them: resilient U.S. economy, sticky inflation, and then with respect to there's also a third active theme: global liquidity retreat, which I would argue the BOJ data today, amongst another signal that we had in our research that we won't spill here, also caused us to erode our conviction in that theme, which is obviously positive for asset markets. So that's it. We'll wrap it up there. Darius Dale presenting our macro minute for Friday, April 26, 2024. Everyone have a wonderful weekend. Best of luck out there. We will catch you back here on Monday. Cheers.